Hello and welcome to the Freddie Mac Connect Keep Your Eye on APIs session. Audience members are in listen-only mode. This session is being recorded and will be available following the conference. To submit a question, please use the Q&A box at the bottom of your screen. If you experience any technical issues, please use the Q&A box and someone will assist you. Lastly, you will find icons at the bottom of your screen with links to the speakers' bios and the presentation deck. With that, I will turn it over to Freddie Mac Product Owner and Senior Manager, Dolly Anderson. Dolly, the floor is yours.
Thank you so much, and welcome everybody to our session today, Keep Your Eyes on APIs, where we will focus on our Freddie Mac APIs and have a discussion on how you can use them to bring value to your company and your borrowers. My name is Dolly Anderson. I'm a Senior Manager here at Freddie Mac, as well as the Product Owner for our Developer Portal and a handful of our Origination APIs. I'm joined today by Mark Compton. Mark is a Director in our Servicing Strategy and Integration team, where he and his team are responsible for helping our servicers and business partners integrate to our API technologies for servicing. We're also joined by Mike Conlon. Mike is a director in our Loan Advisor Strategy and Solutions team, where he and his team drive our origination-focused API strategy and collaborate with sellers and business partners to identify new API opportunities. Our session today is all about APIs. So let's do a little refresher on what an API is. API stands for Application Programming Interface, which really just means a systematic way for applications or systems to easily talk to each other. In other words, an API is a simple way for two applications to exchange data and information. Our APIs are lightweight integration options that you can build to use to request and receive valuable data and insights from Freddie Mac, often with minimal upfront data requirements. Because they are lightweight and standardized with simple structures, they're easy and quick to build to, which allows you to explore the many opportunities to find ways to streamline your processes throughout the mortgage lifecycle. We're going to explore some of these opportunities with you today, but first, let's watch a short video on how APIs work within the mortgage process. Now let's talk about our Freddie Mac catalog of APIs available on our developer portal. Mike, do you want to give us a summary of the APIs that we have available throughout the origination process?
Sure. Thanks, Dolly. So over the last year, we've worked really hard to grow the API catalog. So many things in our conversation last year that were coming soon are now broadly available. You can see here that we have broken up the catalog into different origination or underwriting stages, points in process. Generally, the APIs kind of fit organically, naturally into a specific point in process. But I will say that one of the benefits of APIs is process flexibility, right? So they can be used in many different ways and be tailored to fit your custom processes. So let's start with pre-qual, point of sale. So we have affordable check, risk check, and aim check. These are three, of the big APIs that we want to talk about today. We're going to get into them a little bit later on in the presentation. you take a look at loan lookup. So this is really all about helping you identify when an existing mortgage is in Freddie Mac's portfolio. Sometimes we have specific programs or offerings that you're eligible for when it's a Freddie to Freddie refi. So you can use this API to quickly understand and determine if an existing mortgage is owned by Freddie Mac. Then we have the income limits API. So this is all about identifying the area median income limits for a given subject property address. It's a really simple API. All you need to do is provide us with the property address, or even less than that, a zip code in a state, and we'll pull back the income limits for that given set of data so that you can more easily identify low income purchase and very low income purchase loans. And this is a good example of an API that can work in multiple phases, right? So we have it sitting here in the retail channel for use pre-qual, but it also can apply in post-close correspondent. So if you're an aggregator and you need to QC some of the loans to understand how they fit in from an income perspective, or if you're trying to source low income or very low income purchase loans, then the income limits could be a good fit there as well. So let's go ahead and move on to purchase processing and underwriting. Here you'll see the loan product advisor APIs. So LPA loan submission, that's your normal SysToSys integration with loan product advisor. And then the LPA loan assignment API is a tool to use to transfer ownership of the LP key between brokers and wholesalers or in the correspondent channel. So that's just giving access to the LP key and the LPA results, including the credit report, and a way for you to transfer those docs and data. When you see property insights and current mortgage snapshot, we will talk about those in more detail a little later on, but they're efficiency tools in underwriting to provide you with extra data so that you can streamline your processes. Moving on to post-close and correspondent, you'll see the loan advisor data share. So this is our long-term replacement for the correspondent assignment center. In today's world through CAC, a correspondent originator goes into assign viewing rights for the loan advisor results to an aggregator. But with the data share, it's all happening system to system, and the aggregator is empowered to pull those documents and data back themselves. So if we move on to selling and delivery, you'll see a couple popular APIs here as well. So the pricing API has been in the market for a while. We have integrations with many technology vendors and secondary market advisors. This is all about pulling back pricing information and rate sheets for both cash and guarantor executions so that you can make a best X decision on your trading platform. Then the committing API obviously is the next step in the sequence. So you've got your pricing, you've determined that Freddie Mac is the investor of choice. Now you want to take out a contract and lock that loan with Freddie Mac. That's what the committing API is for. And that also works for both cash and guarantor. Now, beyond that, we have a new API here called the Cash Settlement Purchase Statement API. This is a new API that is used to automate some manual reconciliation processes, right? So the loan is funded. In yesterday's world, you would log into a loan selling advisor to export the purchase advice. Now you can do it system to system with this API in an automated fashion so that you can move more quickly to clear your warehouse lines faster and originate more loans. So that's kind of the summary from point of sale through selling and delivery on the origination side. Let me turn it over to Mark so he can talk about our servicing portfolio.
Thanks, Mike. I appreciate that. So yes, servicing and loss mitigation has not been at the API game quite as long as the originations, but we have learned a lot as we have kicked off Reimagined Servicing a couple of years ago. And in that space, we found that there was a need for APIs to have a better experience with systems talking with each other. So for example, in loss mitigation, Workout Prospector has been around for a while. It's been a venerable system, but it was time to upgrade. So in light of that, we have introduced several APIs in the loss mitigation space. I want to talk about the retention API. And essentially what that is allowing for servicers to communicate system to system to get solutions for our retention products. Mainly in this regard, we're looking at flex modifications and payment deferrals. So you're able to request an approval, check for eligibility, and even settle the flex mods and payment deferrals through that API. We've also introduced our liquidation API, which is focused mainly on short sales. And you're able to request approval for a short sale and settle the short sale through this API. And sort of going hand in hand with that API, we also have introduced the real estate valuation API, which is a fancy way of saying minimum net proceeds. So you can use that API to communicate with Freddie Mac to find out what is the minimum net proceeds we would take on a short sale. And in addition, we have also introduced our workout options API, which is a lightweight request to Freddie Mac to find out eligibility, which right now we're really focusing on the retention products, FlexMod and payment deferral, but we will be adding liquidations later on. So that is the loss mitigation APIs. We've also been looking at our mortgage insurance capabilities and how we can improve there by introducing a couple of new APIs. We have our reconciliation API, which allows for mortgage insurance companies to quickly reconcile the Freddie Mac MI covered newly funded loans with what they have in their database. We make the information available to them. They scrub the data. They send back what matches, what doesn't match, and what doesn't match is then made available through that API to our servicers, who can then reconcile and get the certificates and the mortgage insurance coverage matching, so all three entities have the same information. Then finally, we have our mortgage insurance claims API, which right now is available to the mortgage insurance companies. So we are able to process claims more efficiently through those APIs. And then we've also introduced a user interface for the servicers to be able to track the status of Freddie Mac and the mortgage insurance companies, communicating back and forth as we process those claims through the APIs. So with that, that is our servicing API catalog. Dolly?
Thank you both. We definitely have many options available for our APIs to deliver value throughout the mortgage process and to everyone involved. By using our APIs, together we can help borrowers by providing opportunities for faster mortgage assistance and finding ways to reduce documentation needs, creating a better overall experience for our borrowers. They also provide you with many options to help find improvements and efficiencies in your operational activities, while helping you to find ways to reduce risk, increase your speed to market, and potentially open up new business opportunities for your company. For us here at Freddie, this can also help us reduce risk and minimize credit losses while improving the overall mortgage quality and your experience partnering with us. Our APIs are a beneficial way for us all to work together to simplify the process of obtaining home ownership. Now with that, Mike, you gave us a great summary of the origination APIs. Do you want to talk a little bit about how some of these APIs can help clients at point of sale?
Yes, thanks, Dolly. So providing solutions at point of sale has been a major focus for our team over the last year. We want to be able to provide our view of credit risk, eligibility, and borrower capacity earlier in the origination lifecycle. We're doing this to address a few challenges in the marketplace, right? So first, borrowers kind of have just an expectation of a digital first experience now, right? They want to be shopping on their phones. And so how do you hook the borrowers? How do you incentivize them to continue submitting information through screens to get to an application? Beyond that, we need tools to help you understand and direct borrowers to eligible, affordable products, especially for first-time home buyers and underserved borrowers. And then as well, it's helpful to have our view of credit risk and borrower capacity earlier in the process so that you can sort of proactively guide a borrower down the optimal loan path. And really what this all amounts to is supporting a fully digital pre-approval process that incentivizes the borrower to continue down the underwriting process to get to a full loan application. So what do these tools do to support that? Well, they're focused on, providing credit risk assessment pre-AUS straight from our engine, right? So it has some teeth behind it, and it'll provide back conditions, if you get a yellow, so you can understand how to move forward with that borrower. More information on affordable product eligibility. It's a really competitive market right now trying to source affordable business. So using our tools, you can better understand if and when a borrower meets the income requirements to fit into like a home possible loan. And then also getting a view of borrower capacity with Freddie Mac's assessment of assets and income, right? Having that confidence in the data and the assessment from the investor will allow you to move forward with like a fully digital pre-approval process that has some substance behind it and also better enables the loan officers to talk about the benefits, incentivize the borrower to move forward in the application process. So here, I think what we can do now is take a little deeper dive into each of these APIs. Sorry, if you can go back, please. Because they work discretely, and then we'll summarize it by showing how you can combine these services and run them in sequence to deliver that fully digital pre-approval outcome for the lender and for the borrower. So starting with Affordable Check, this is all about helping low-income borrowers find the product of best fit, right? So it's running the income test to see where a borrower fits relative to the area median income limits, as well as overlaying some eligibility rules to give a preview of eligibility for our affordable products, right? Home Possible, Refi Possible, HFA Advantage if you're working with a housing finance agency, and then soon to come Home One. It works off of a very skinny data set, so it only needs 4 or 5 data elements to give you an answer. And it should really help loan officers source the products, which they can then, advocate for the benefits of, say, a Home Possible loan with low down payments and cancelable MI and capped or no credit fees, right? So all of that helps translate into a better story for the loan officer and the borrower. And then if you, move forward and expand the data set just a little bit, still a big subset and way less than a full application, you can run the LPA risk check. So this is giving you preliminary view of the credit risk assessment from the investor's point of view, right? It's using our engine. And you'll get the accept or the caution, as well as any conditions or defaulted information. So this is a really valuable insight to have about the borrower's creditworthiness before they even submit a full loan application. And so those two combined really speak to, a pre-qual. If you layer in the AIM check piece here, our asset and income modeler, where you can use bank statements or account data to get a view into eligible assets, direct deposit income, and employment, then we're talking about really a fully digital pre-approval. So those three together, I think, tell a really good story. And so now we can jump ahead and take a look at a quick process flow of a borrower journey to see how it all comes together, right? So on the left-hand side, you have the borrower. They're on their phone, on an app, shopping for housing. Maybe they don't even know specifically which house they want to buy yet. They just know geographically, where they're interested in purchasing. So as they start entering information into the client application, this is your POS tool or an LOS tool, that system is talking behind the scenes dynamically with our Freddie Mac APIs, right? So you can run in the sequence we just talked about with first little bit of information, runs Affordable Check, and say this is a low-income borrower that qualifies for Home Possible based on that preliminary assessment. The loan officer in the same session talking to the borrower can advocate for those product benefits, incentivize the borrower to continue providing information, get that risk check and credit risk assessment, see a green there, move forward with the bank statements to do an AIM assessment, right? So, hey, we came up with this income number. You have an accept on the preliminary credit risk assessment, and it looks like you're a candidate for an affordable product. All of that combined tells a very compelling story, and it's happening dynamically in real time or near real time in the same session with the borrower. So I think that removes friction from the process. It tells a compelling story, and it puts the weight of the investor's view of the loan behind it much earlier in the process. So hopefully that will lead to driving a better converting more leads to applications to get them into underwriting, where you can take advantage of more APIs we have available there.
Thank you, Mike. That was fascinating to see how these APIs can work in real life and hear about the options that we have so early in the process. How about a little further down the road when we get into underwriting? Can you tell us a little bit about the APIs that we have available in underwriting, Mike?
Yes, of course. So there are two that I want to highlight here. And the story for these APIs is really about process efficiency and access to data. So we'll start with Property Insights. This is to support the collateral underwriting process. All this API needs to run is a subject property address, and then we will run into our database and pull back historical appraisal information. So the use case here is really to help with collateral underwriting. So know before you order on new appraisals. You'll get information on from prior appraisals on the appraisal form type, so you can more easily identify condos. Condos may have a separate workflow for underwriting, and it's really helpful to know up front and have confidence in the appraisal ordering process to avoid any kind of costly delays and rework that could extend the time to close. Beyond that, you can get useful information like the PUD indicator if there's an accessory dwelling unit on the property, zoning compliance, all that kind of information that's helpful in the collateral underwriting process. And so another use case actually that pops up here for Property Insights is if your loan, the new underwrite, gets an appraisal waiver, right? In that event, you're not ordering an appraisal on the loan. However, you're still going to be expected to be able to provide property type data in your ULDD file for delivery. So Property Insights can be used to help fill that gap. You can pull historical appraisal information to better understand, if it's a condo, what is the design type? Is it a high rise? Is it a mid rise? What have you? So it's really access to data to help you fill gaps that occur when a good event happens, like getting an appraisal waiver. So that's another use case there. So now we can shift gears over to the current mortgage snapshot. So the Property Insights is about collateral. Current mortgage snapshot is more about understanding the debts and liabilities on the borrower. So the primary use case here is for refis when you need to run net tangible benefit calculations, right? You got to prove that there's a real benefit to the borrower to do the refinance. And this API will query our portfolio and pull back payment information, loan term information on existing active mortgages in our portfolio. So assuming you've run LP and you have an LP key, you can ping this service and pull back information from closing and then current as well related to the monthly P&I, the interest rate, the note rate. Is there mortgage insurance on the loan? Things of that nature that go into determining the net tangible benefit on refis. But it can also be used on purchases as well, right? Because we're not exactly in a heavy refi market. So on purchases, if you have a borrower looking to do a second home or an investment property and you need to understand their liabilities on REO properties for qualifying purposes, then you can use this API as well, pull back that information, and then have added confidence that the payment amount the borrower told you aligns with what Freddie Mac has in their system. So both of these APIs really focused on process efficiency, removing friction, giving you access to more data, and just making it easier on the underwriter to get through these critical underwriting steps.
So Mike, do you want to talk a little bit about this scenario here?
Okay, so I think we have a customer testimonial here from Doug Pro, who is the Director of Engineering Technology at Rocket Mortgage, speaking to their experience building to the Mortgage Snapshot API. So I won't read the whole quote, but I want to call out two pieces here. So one, it speaks to the integration experience, how easy it is and collaborative it is building to our APIs. And then two, the benefit of the APIs, right? So we were able to meet a need for Rocket to help them more efficiently tackle a critical underwriting process. So I think from both of those perspectives, it tells a really good story of how working with Freddie Mac APIs can help your business.
Thank you. That was some great information on options that we have to provide value throughout the underwriting process and bring that data up, to that process. I know some of our business partners are also probably interested in the APIs that we might have available post-closing after the loan is closed. Mike, do you want to tell us a little bit about those?
Yeah, of course. So let's use, example loan from earlier, and we'll say that it's a correspondent loan and it's up for bid for the aggregators. And here we're really talking about the loan advisor data share. So this is primarily for the correspondent channel for aggregators so that they can get access to Freddie Mac documents and data, including the UMDP data sets, at bid to support their pricing and purchasing decisions. So here you have access to the request and response files from all of our loan advisor tool sets. So loan product advisor for the underwriting file, loan closing advisor for the closing data set, and the CD PDF to be able to determine, hey, was that mandate met? Is the loan fungible to Freddie? Collateral advisor for the appraisal data and Freddie's view of the collateral. And then LQA, if the loan runs through loan quality advisor with the ULDD data set, you have that as well. So that's the four loan advisor tools in docs and data sets. And then we also have what we call the summary results method. So this is a snapshot of critical assessment data across the loan advisor tool set. So you're going to see credit risk assessment result. You're going to see rep and warrant eligibility information. You'll see was the UCD mandate met, and then is there an appraisal waiver on the loan, right? So that's an important snapshot for aggregators when they want to make a purchase decision to understand, do they want to buy the loan and do they want to adjust their pricing because of any incentives that may align with like selling to Freddie Mac. So these tools are really efficient. It's system to system. It uses key identifiers such as like a LP key and a borrower last name or the LP key and the property address to look up the loan in our system and then push that information back to the aggregator. And like I mentioned earlier, it removes that manual step that exists today in Correspondent Assignment Center where the originator has to go and assign the loan to the aggregator. So it's more streamlined, system to system, really effective access to docs and data for our aggregators. So I think we can move forward here and show now that, hey, the loan was attractive to the aggregator. They purchased it from the originator. Now, what do we have available to support that seller when they're making a best X decision, right? So we talked pricing and committing a little earlier, but I think these APIs all bundle together, right? So you use the pricing API to pull back a rate sheet and input that data into your trading platform to make a best X decision. And let's say that Freddie Mac is the investor of choice. So you move forward and utilize the committing API to take out a contract. So now that loan has been allocated, it's in a contract, it's delivered to Freddie Mac. And here's where the cash settlement purchase statement API comes in, right? So the funding is done and you need to conduct your purchase advice reconciliation processes. So this API automates that work. There's no more stare and compare. There's no need for the manual steps of logging into Loan Selling Advisor and downloading the PDF and then keying the information into your system manually, right? So you get a reduced risk of typing errors, right? So the data quality improves, the speed improves because it's all automated system to system. And all you have to do is provide, your customer number so we can identify you and a date, and then we'll pull back your book of business on that date with both contract level and loan level information, including the Exhibit 19 fees and delivery fees, right? Everything you need to be able to run your reconciliation processes. And this is another one where either, you can build directly as a direct integration to the API or, working heavily with technology vendors and secondary market advisors to provide integrations that way as well. So I think now we've kind of seen a view from point of sale all the way through the secondary activities, right? Delivering to Freddie Mac and the investor. And it tells a really nice story of how these APIs can support you at each step in the journey. So now excited to see how that journey continues through servicing and loss event.
Thank you, Mike. That was helpful to put the APIs in context like that and show them throughout the journey. Let's turn to Mark now. Mark, why don't you talk a little bit about the API options that we have for servicing technology?
Sure. Thank you, Dolly. So yes, hopefully at this point, all the origination, underwriting, and settlement closing has gone well, and we have a very good loan on our books, but sometimes life happens and we get into servicing. So once a loan has been boarding on the servicing systems, servicers are managing the portfolios, and let's say a borrower ends up having some difficulties with making their payments. Servicers are going to be able to use Freddie Mac's APIs to be able to more efficiently process the loss mitigation activities for Freddie Mac on the Freddie Mac loans that they service. And so let's talk about a couple of those right now. So as I mentioned earlier in our catalog, we have our Workout Options API. So this API is a very lightweight API, minimal data set that you're sending to Freddie Mac to test the waters, as we kind of like to say. This is really trying to determine the eligibility of a borrower for our retention products, so our flex modification or our payment deferrals. So you submit the case through Freddie Mac Resolve API, and you get an almost instantaneous answer back, which will tell you if the borrower is eligible for the retention or a payment deferral solution. And we're looking at all manner of flex mods and payment deferrals. So when you submit it, you're going to get an answer back on a regular flex, COVID flex, or also a disaster flex. And likewise, you get an answer back for payment deferral, COVID payment deferral, or disaster payment deferral. So once you have determined that the borrower is eligible, then you're able to use the retention API to, let's say a borrower is eligible for a flex mod and you think that's the best course of action, then you will want to set the borrower up on a trial plan period where they will make trial plan payments to determine that they are able to support the flex modification. So you put them on a trial plan period through the Resolve API. The borrower makes their 3 payments that they need to be able to close the modification, the flex modification. Once they've made their 3 payments, you're able to go in and get the final approval through the Workout Approval API. And then once you've got signed documents back from the borrower, you can go in and settle the case right there in the Resolve API so that the borrower is able to proceed with making their payments. Very similarly, if you decide they wanted to go with a payment deferral, then you're able to get a payment deferral approval request submitted through the Freddie Mac Resolve API, and the borrower is agreeable, then you're able to settle it. So this is very beneficial because you can also use these in real time with having real conversations with borrowers. So you're able to give them the solutions right there on the phone. So let's move on to our liquidation APIs. So we have discussed earlier how this is focused on short sales. You're able to work with realtors and the borrowers to review the terms that the realtors have been able to acquire from a potential buyer, submit this through the liquidation API, find out what Freddie Mac will approve and allow for closing costs. Once you have the approval, then you are able to follow it along, get the closing completed through the settlement process at the attorney's office or wherever you're settling the case. And then once you have the proceeds in, you're able to submit the case through the liquidation API to settle the short sale on Freddie Mac systems. In conjunction with the liquidation API, we also have our valuation and pricing API. And as I mentioned earlier, this is kind of a fancy way of saying minimum net proceeds. So if you want to know what the borrower is going to be eligible for in regards to what Freddie Mac will accept for our minimum net proceeds after the sale is completed, you can run it through this valuation pricing API, get that information so you can work with the realtors with confidence of knowing what you will need to be able to settle the case and get Freddie Mac approval to be able to work through the rest of the short sale process. So those are some of our servicing APIs that we have in our loss mitigation space.
So Mark, do you want to talk about how these APIs work in action?
So thank you, Dolly. So yes, let's say that you are a servicer that's using a workflow provider, a commercially available workflow provider to process your loss mitigation, or you might be a servicer that is integrated directly through your own proprietary system. So you are able to connect with Resolve API through either of those avenues, submit a case into Resolve. The case will be ingested. It will, again, look for eligibility. It will put it into our data validation and analysis system. The process is almost instantaneous, 3 to 5 seconds. Our system evaluates, applies logic to it, looks at the rules that are essentially complying with the servicing guide for loss mitigation cases and what needs to be done. And it will render an answer, submit it back into the Resolve API, which will connect back into your workflow provider or your proprietary system to give you an answer.
And I see we have another great customer testimonial to talk about. Mark, do you want to tell us a little bit about this story?
Absolutely. Yes. Thanks again, Dolly. So yes, Jay Jones was Mr. Cooper, who was one of our first, actually the first proprietary servicer, meaning that they use their own internal loss mitigation system. They were the first ones to connect directly to our Resolve APIs. And as you can see, Mr. Cooper is focused on providing customer and team members with seamless, friction-free experience. The Jay has, indicated that the APIs are the wave of the future for them, and we'd like to be right there with them. And they are experiencing great efficiencies. So again, we've cut out some of the processes that servicers used to have to do prior to submitting a case with us. They have been able to leverage our ability to be able to provide a value on flex modifications, so they no longer have to go and order broker price opinions or valuations to determine the value for a flex modification. We do that all internally in our systems here at Freddie Mac, so they no longer have to take the time and effort to do that. Also, they have gained quite a bit of efficiency by no longer having to go look up a loan mod history. Freddie Mac has the history of the loan modification on our systems, so we can tell how many times it's been modified. And this helps with the servicers, because let's say a servicing transfer had happened previously, they may not have the records as quickly at their fingertips on a previous transfer. So they no longer have to go look up the mod history because Freddie Mac has that information available. So again, I think Jay's finding a lot of efficiencies, and we are glad to work with Mr. Cooper as one of our partners.
Thank you, Mark. That's all very interesting and a lot to learn about the Resolve API options. I know we have a couple options that also help with the mortgage insurance process. Do you want to tell us a little bit about those as well?
So yes, Dolly. So we have we mentioned earlier that we also have a mortgage insurance reconciliation process, an API there, where the mortgage insurance companies on newly funded loans, we make the data available to the mortgage insurance companies through our API for them to go out and pull down the information and reconcile newly funded mortgage insurance certificates and information through the API. And we have found that mortgage insurance companies have gained quite a bit of efficiency through this API, as we have taken a process with them that used to take weeks, and we have reduced that down to hours. So they are able to quickly leverage API, review the newly funded loans, get the information back to us of saying, okay, here are the loans that all our information jives, and here are the loans that there's a couple of questions on this. So what we then do is take the loans that we have a couple of questions on. We then make that data available to our servicers via the reconciliation API. The servicers are able then to quickly research, determine where the discrepancy is, adjust the discrepancy, and submit the information back to us, so that at the end of the day, we, the mortgage insurance company, and the servicers all have the same information, which is really valuable, because as much as you hate to see it, sometimes claims happen. So we also have a claims API where we make this available to the mortgage insurance companies, where we can submit our claims after a trigger event has happened, say foreclosure or workout. We can submit the claims to the mortgage insurance companies via the API to become much more efficient, greater turnaround time on being able to process and get the claims finalized, less supplemental claims, and just a great experience we feel with the mortgage insurance companies and ourselves. There is no API currently available for the servicers in the claims space, but we do have a user interface that is available for them to be able to monitor the progress of the claims as it goes through the process. And if the mortgage insurance companies have any questions, they're able to communicate with the servicer via the user interface to get questions answered. So we're really excited about that. And then finally, you see here cancellation API. This is on the horizon, so we're anticipating beginning work on that in 2023 to help with cancellation work in the API space for newly funded loans. So more to come on that.
Well, thank you both. That is a terrific discussion, and we've learned a lot today about how our APIs can really deliver the value that we discussed in the beginning for everyone involved, our borrowers, our business partners, and our clients. We have many options to improve the mortgage experience, reduce risk, find ways to drive operational efficiencies, and provide insights throughout the loan life cycle. If you'd like to learn more about our APIs, you can find some valuable resources on freddiemac.com or visit our developer portal to get started with the APIs that we have available for you to explore in our catalog. Thank you all so much for attending our session today. Now let's open it up for questions.
Thank you, Dolly, and thank you to our presenters for such an informative session. We will now be taking questions. If you have a question, please submit it in the Q&A box at the bottom of your screen. If your question does not get answered during the session, someone will follow up with you after the conference. We've had several questions come in already, and it looks like we have time to take a few, so let's go ahead and get to the first one. Mike, this first one will be for you. The question is, I use an LOS POS system. Can the system I use integrate with any of these APIs?
Yeah, great question. So it works just like it does for all the other loan advisor integrations that are already out there. We do this every day with LOS and POS partners. So I would encourage you to check our catalog. Your LOS or POS provider may already be integrated with our API. And if it's not, then contact your rep at Freddie Mac and contact your rep at the technology provider so that we can get that information shared and then work together, collaborate on prioritizing the work so that we can get the API available in the way that you need it.
Thanks, Mike. Mark, this next one would be great for you. The question is, I want to use a Freddie Mac API, but do not have the resources to build now. Is there a user interface available with your APIs?
Great question, and thank you. So yes, APIs are inherently system to systems communication with each other. And if you're working with large volumes of data, they are much more efficient. But we do understand that servicers do have limited resources sometimes. So we are, as a matter of fact, in the process of rolling out user interfaces. Currently, we do actually have the liquidation short sale user interface that has been rolled out and is being used by the industry as of August 1st of 2022 for all short sales. But we are also getting ready to introduce our retention user interface, which will become available starting in December, with us completing the full rollout of that early next year. And we're anticipating that the industry will be able to use that, or will be sort of mandated to use that August, end of July next year in 2023. So, but yes, user interfaces will be available. So we're looking forward to those.
Thanks so much, Mark. Dolly, we've got one for you. How do I get started with any of the APIs you've talked about today?
That's a really great question. You can either reach out to your Freddie Mac support team and work with them to get access to our developer portal, or you can visit our developer portal at developer.freddiemac.com and submit an inquiry through our Contact Us form with the APIs you're interested in, and we'll reach out to you to get you access, where you can start exploring our catalog of APIs and use our developer portal's easy-to-use self-service functionality and features to learn more about them, learn how they work, and understand how to build to them.
Great, thanks, Dolly. That's all the time we have for questions today. If we did not get to your question, someone will follow up with you after the conference. Your opinion is important. Please take a few moments to take our brief survey so that we can continue to bring you timely and relevant content. You can also log in at any time after the conference to play back this or any other session. Thank you to our presenters, and thank you for joining. Please enjoy the rest of the conference.